Welcome to the Metal Investment Forum. I'm pleased to have Brad Thrall, President of Alexco Minerals. He's going to give us some more details of their incoming project, etc. So, Brad, welcome.
Well, thank you, Chen. It's good to see you again and talk to you.
Yeah, can you give us some idea of your current plan and exactly when you can get into production? You start when you ship the concentrate and you get the cash flow coming out, and also, people want to get some idea what kind of cash flow we're talking about. At $20 silver, $30 silver, or silver go to 40, 50. How much are you going to get? Yeah, and also getting questioned about your hedging strategy, but maybe you just go give us an overview.
Yeah. No, absolutely. I mean, I like that $40 silver number you just threw out there. So, yeah, I mean, as you know, we did announce just a few weeks ago. We announced that we have made a formal decision. We're moving forward at Keno Hill into final development and production. So, we're currently ramping up at Keno Hill. We're underground at the Keno mine. We're actually drilling off our initial long hole ore blocks there. We've started resuming development at Flame and Moth. We've got a number of mill improvement projects underway. We're actually adding a second ball mill, putting additional filtering capacity in for our tailings, regrind mills. And all of this is coming together that will lead us to concentrate production, silver concentrate production in the fourth quarter of this year. So we're well on our way to meeting that schedule, and again, I think it's a pretty exciting time. I mean, obviously everybody sees the what silver is doing in terms of appreciation and catching up to gold, if you will. So I think the timing is fortuitous. I mean, to be bringing silver production into a market greater than $20, and even today $26, $27 silver. So again, but our focus is clearly to meet our schedule of the fourth quarter of this year.
Excellent. Now, you are probably one of the few company bringing silver into production this year. So it's perfectly timed. I have to congratulate on the timing. As silver taking off, you're going to produce silver in a few months.
Well, again, yeah, I certainly can't take credit for necessarily the timing, but and you're right. I mean, I think one of the attributes of Alexco is there are just, as you know, not very many primary silver producers left in this industry. A lot of the well-known names have diversified, gone into more gold, more, and that's great. I mean, so if you're really looking for exposure to silver, I mean, Alexco really offers probably the highest coverage in the industry. 75 to 80% of our revenue will come from silver. So, when you look at even in a $20 silver market US with the current Canadian exchange rate, the foreign exchange, which is very important, we'll be cash flowing 38 to $40 million a year in free cash flow off of a $20 market. So really, so every dollar of silver increase, just really comes right down to the bottom line in terms of cash flow for us.
Wow, excellent. Can you give us some idea what $30 silver will do?
I mean, again, these are kind of broad numbers, but once we're in kind of full production, our nominal production rate is $3.5 to $4 million 3.5 to 4 million ounces per year of silver. Again, we do have a streaming agreement in place with Wheaton Precious Metals, so they have the right to 25% of the silver, but again, they pay us for those ounces as well. So, so in rough terms, every dollar in an increase in silver would be another, at least $3 million US, $4 million Canadian increase in cash flow, if you will.
Free cash flow, yeah.
That's right.
Great. So yeah, we can imagine. I see silver on this run. If we get, see what I see, we can probably try to hit 50 first and then see how high it goes.
Okay, well, I'm that down. I'll mark that down. Okay, that you.
Yeah, tremendous cash flow, and for you primary silver producers, excellent time. So can you give us some idea? Do I have people asking whether do you plan to hedge silver going forward, or is it because you're such a low cost producer, maybe you just let it run?
Yeah, no, I don't think we have any intentions of hedging silver. I mean, I think certainly our shareholders, again, they invest in Alexco for the upside, for sure, in an appreciating silver market. Again, we have somewhat of a natural hedge on the downside already with our agreement with Wheaton. As so, if this price of silver does retrace, they will pay us actually more for their ounces of silver. So I mean that downside protection is really already in place. And again, it's not just a silver price. We pay, I think, just attention to the foreign exchange. The U.S. Canadian dollar. So again, we sell in U.S. dollars, in silver, obviously, but we're a Canadian operation. So 75 to 80% of our costs at Keno Hill are based in Canadian dollars, and I think it's an interesting combination. Now, I mean, silver today, $26, $27 US, but the Canadian dollar is still, essentially at 75 cents. So you're really looking at $37, $38 Canadian silver right now. So that's important, certainly, to keep an eye on the foreign exchange, and that will be part of, I think, of our trade management as we go forward is to look at FX.
All right, excellent. And then can you tell us the exploration potential of this area? You have owned the whole district. Been to the place from one side to the other. You drive for forever.
Yeah, no, exactly. So this is a very large district, 200 square kilometers in size. We're exploring there right now. We're going to do about another 4,000 meters, which we're going to target what we call this Birmingham deep target. And we really think that there's an opportunity at depth. This is a couple hundred meters down below the current reserve resource area. So we think there's excellent opportunity there to significantly expand that deposit. It's not going to have any impact on our short-term plans in terms of our mine plan, but it's really where we're focused right now in terms of significant resource expansion.
All right, great. I heard from Max Silver when they're at their exploration, when they go deep, they find another even bigger zone, and they tend to have a slightly variation, more base metal, less silver. Do you see that similarity in your case, or you see it more consistent as what you have?
Yeah, I mean Birmingham is a little different. It does have a lower base metal content than certainly the Belkeno mine. When Belkeno was in production, we saw up to 15% combined lead and zinc. So Birmingham is a different, a different, if you will, in terms of the silver grade and the ratios of the zonation. It's a much higher grade of silver, but a lower base metal content.
All right, great. Thank you, great. And we as shareholder, it's very a lot of excitement. Finally, you get into production, and then as you discussed, you've done this before, so this is the second time. So we should expect a smooth ramp up, and we will see you with the cash flow, with the silver price going higher.
Well, yeah, I mean, it is mining, so we're clearly focused on execution right now. Our job is to make sure that we execute on what we say we're going to do here on our schedule and our performance, and that's what we're clearly focused on. So.
All right, great. Thank you. Good luck, Brad. I'm looking forward to see the silver bar.
Okay. Thanks again, Chen.